So I'm really sorry, guys. I think I was on mute. So let me begin it again. So as we can see that the Nifty 50 and Nifty 500, most of the action is positive today. Most stocks are advancing up. In Nifty 50, 33 stocks are up, and in Nifty 500, 355 stocks are up. And going through the options again, you can see a lot of call open interest on 19800 and 19700. And in Bank Nifty, the highest amount of call and put writing is on the same level, which is 45,500. So this remains to be a deciding level in terms of Bank Nifty. Going to the technical setup of Nifty and Bank Nifty, as we discussed in last live stream, that the 10-day average was breaking on both the indices, and right now they are trading below that. But if we look at the 20-day average, it has held well, while the Fridays as well as today's low being right at the 20-day average. So this level remains an interesting level to watch out for, whether or not it holds, which is 19,596 on the Nifty, and whether it is able to recover above the 10-day average, which is 19,744. For Bank Nifty, the 20-day average right now at 45387, and 10-day average is at 45785. Going to the heat map for today. So as you can see, again, similar to the previous session, Nifty CPSC as well as Nifty PSC are top. So PSU stocks are up today as well, but followed by Nifty Metal Index. While the IT index, we have seen that it has been mostly under pressure in the last few days, but today it is popping up at fourth or fifth number in the index list, and you can see all the components are trading positive right now, with the TechM being at top. It is up 2.3%. Right. So that's a quick gist about today's session. So as I said, we'll deep dive into further into sentiment indicators and diffusion indicators to see how we can have a view on the market by using that data. So first, I will go to the FII index futures position. So which is the net of FII's futures long minus short, which means what are the net number of contracts they are holding in index futures. So we have seen in the last few days, this indicator was up from trading above, you can say 80 to 90,000 mark for quite some days, and then it has seen a lot of unwinding from 84,000. It fell to 33,000, and then on Friday's closing, this data is at 13,814 814 contracts. Right. And next, now this indicator has cooled off from the overheated level, but to judge whether it is cooled enough or will we see a whole unwinding to the below is something yet to be seen. But if it is to follow a pattern from the past, then the closest comparison we can do is with the bull market we have seen from the 2020 lows. So from this data, from this low to this high, you can see the behavior of this data. It pulls down to about nearly to zero or plus minus 10,000 contracts. From there on, the rally continues. So as you can see, if I just zoom in here, right now my mark is at around 5,000 positive contracts. I'll just try to draw a horizontal line. So I've drawn a line at about 5,500 contracts from where the data is usually, it cools down and then picks up again. So this is the zone from where the FI data picks up usually. But if we go down to the this phase, which was a sideways kind of a phase for Nifty, then we can see that the FI positioning goes all down to negative 1 lakh contracts, and even the recent low was at almost negative 200,000 contracts. So right now we went close to 93,000 contracts, and we have cooled enough to 13,800 contracts. Now, today's data is yet to come. So this is one indicator you should be watching out for in the near term, because if it starts to turn up from here, which means that the unwinding is done and FIIs are starting to building, longs again. This is how you can draw comparisons from the past by judging the behavior of that indicator, how it performs. Let's go to net index position as well. Now this one is which it takes into account futures as well as options. So which means futures long, call long, and put short is considered as a long. So it is a net of all positions that the FIs hold in index derivatives. So again, if we are to draw comparison with a previous bull market, then you can see, if I try to draw a horizontal line here, this is the level till where the index is cooling off before continuing up again. And it's only in a up down market where we severely go down below this level, and the market is under pressure. So as of Friday, the number has cooled down to this around this level. So this again seems to be a interesting thing to watch out for. If we see some pickup in the data from here itself, then it means that the market is exhibiting a similar this kind of a behavior which we have seen in all of this phase. So we are at that level. This is something to watch out for. So this is how you can use all the indicators available on Strike by logging on to web.strike.money and do your own analysis by judging the behavior of data. So according to me, the best way to judge it is by plotting it below the index itself, which is what we have given here for you to analyze. One more thing I would like to show is the put call ratio open interest. So which is the open interest of all puts divided by the all calls averaged on 9-day basis. So to smoothen out the erratic data. So as you can see, if I try to draw it, these are the zones from where the indicator has gotten oversold and the market has relatively picked up from there in the bull phase. But in the sideways phase, the indicator has gone quite a lot below these levels as well. So in the recent action, it came down to around this 0.8 level, and from there we saw continuation, and again we are around that level. So it seems uh, it seems that we should watch out for this level again to hold. If it continues to hold up, then we should be seeing some continuation in the index right from here. So again, the same way we analyze the FI futures positions, same is the logic here. By you can just judge the behavior of the data along with the index in the past phases to judge how you can use it to get a market view and trade the right direction on the market. Let's go to diffusion indicators. Right. So in Friday's session, we observed that the during the intraday action, Nifty 50 stocks above 20-day moving average were around 48, and by closing hour it recovered to around 50, and today it is showing an uptick of 6, which is 56, which means 6% more of the Nifty 50 stocks are trying to close above their 20-day average today. But at the same time, we observed that the similar kind of a breakdown was not visible in the other broad indices like Nifty 500. So, which was a signal of strength. As you can see, these are continuing to hold up. So let me go back to Nifty and see the behavior of the same indicator in the previous bull market. So I'll draw a horizontal line around the 50 mark. So you can see the indicator falls to 50 and then the market continues on the way up. It is only when the 50 level is broken when we see a deeper cut like this phase, where from where the Nifty has fell from a high of 11,647 to a low of 10,805 on closing basis. But if the 50 level keeps on holding, there are only minor pullbacks and mostly continuation on the way up. So coming back to where we were, so in this particular phase, from the rally that started from March lows, you can see the number is back to what 50 and today is covering above that. So if we are to continue from here itself and go all the way up back to 90, then it would mean that we are in an extended trend and the stocks are just, there is a strong rotation and not more than half these stocks are able to break their 20-day average at once. So some of the other stocks are coming in showing some strength, which means the index is holding up well. So if you have any doubts, just keep posting the comments. I will take all the questions. Now, let's have a same look at the stocks above 50-day moving average. So the number is even more higher in this case. So see, to have a deeper pullback, this indicator has to go below 70. See, I drew a line here. So if the more than the 70% of the stocks of Nifty 50 keep trading above their 50-day average, the index is continuing to show strength on the way up. It's only when it drops below this number is when we see a meaningful pullback or a deeper correction. Right now, 78% of the Nifty 50 stocks are above their 50-day moving average, and this remains a sign of strength and a level to watch out for, whether or not we continue from here or there is a breakdown. So, so this is how to use various sentiment data points and diffusion indicators in your analysis to judge like to take a bullish or a bearish view on the market, and then find out sectors or stocks that may be good for the current phase. Now, as per analysis, we checked that no key levels have been broken yet, and the FI positioning has been cooled off enough. So the evidence is mostly towards the bullish side. Now, to pick up a sector from here, you can take help of seasonality as well. So let's go top down. Let's go with top down approach there as well. So if we zoom into Nifty 50 seasonality, I can see August month has been positive mostly. Only once or twice it has been severely negative. That was in 2015. That's it. Otherwise, it has been either flat or positive. So while I was scrolling through the seasonality of various sectors, I opened this Nifty consumer durables. So let me open seasonality for that. So see, August month has been positive except for 2015 for this index, and on an average, it has gained 4.1% in the August month. So this whole June, July, August period has been historically bullish, but this year July was very muted, with the index moving up only a 0.5%. As today is the last trading session of the month. Now we are starting August, so we'll look at August. So we can see it has gone up in the 4 to 5% range from all the past years. So history doesn't have to repeat, but it rhymes. So it is a index to watch out for in the August month. So if we are to drill down in the this index itself, let's go to heat map and try to pick a stock or two and do their analysis. So here is Nifty consumer durables. So on a 3 month basis, I can see the outperformers are Dixon, Kajaria Ceramics, Ember. Actually, all stocks are quite a lot up, but the higher beta stocks are up more than the others. So on a 1 week basis, similar names here. So the bigger components of this index are seeming to me are as Whirlpool, one of the names, Voltas as well. So let's pick two or three stocks and try to go into the stock section and check their setups and seasonalities. Just a second. Yeah. So here I am in the seasonality for Voltas Limited. So just a disclaimer, since we are discussing stocks, these are just observations based on the data. We're not giving out any recommendations here. So historically, we can see more often than not, August has been positive for the stock, and average average gain is 4.7% based on previous 9-10 years of data. So if we go to the Rohit setup, in which we have a look at 40-day exponential average, 20-day, the Dow trend, and the RMI. So firstly, the daily chart. So in today's session, it is trying to cross above the 40-day. It is already above 20-day average, and Dow trend is also in buy, and RMI is also given a buy cross. If you look at a weekly time frame, which is a larger time frame, so there as well, you would see this particular week you're seeing a new crossover in the RMI, and the trend is also showing a higher low formation. But this signal gets confirmed only on the candle closing. So for this, it would mean on Friday, which is on 4th August. So right now it is not confirmed, but as of if the price is even at same level by the end of week or higher, then it means that we will get a confirmed signal on this. One more stock that we'll had a look in this heat map was, I think, Whirlpool. Yeah. So similar pattern for this stock as well. August has been good with an average of 4.3%. If we have a look on the setup, so this is the daily setup, and here as well, see all four confirmations coming in one session, which will get confirmed by IOD, which is crossing the 40-day, 20-day higher high, closing above previous swing, as well as the bullish crossover in the RMI. So that is the whole view of a top-down approach, wherein first we try to take a view on the market itself by using various sentiment and diffusion indicators, and there comes into play the seasonality as well to drill down to one sector, and then checking the components of the those that index to select your favorite stocks. So that is one approach. In a way, you can use all the available data and go down till actionable ideas where you can actually invest or trade. So yeah, you can hit up with the questions. Any questions on any of the indicators? Okay. Thank you then everyone for tuning in. We'll do this tomorrow, same time. So you can like, share, and subscribe Strike's YouTube channel as well. Thank you.